So if a stock is moving through a buy point, do I look at any volume indicators? So before you really get too caught up on volume indicators, the first thing you really want to ask yourself when you're buying a stock is, how is the market that I'm trading acting? So if I'm buying a gold miner, for instance, like last week we were looking at them, right? And it's moving through a pivot. What gets you to buy it, right? It's not how the QQQ is acting or the S&P 500, right? I'm looking at the gold futures. I'm looking at GLD. I'm looking at the gold miners ETF. I'm looking at other gold stocks, right? Because birds of the feather flock together. So if I notice, a stock is moving through my buy point, similarly, there's a reason why an Apple and a Microsoft and an Nvidia and they all look really similar. They're highly correlated beta names. So if like one is starting to move, the chances are they all start to move. If one starts to sell off, and then a second one starts to sell off, the likelihood becomes is that the third one and the fourth one sells off. So run rate is nice because it means you're not the only one getting involved in it that day. Usually like on a gap up for earnings, run rate will be a little bit higher. So that tends to be a thing. But look, if you are using proper position size, like 5%, 10%, 15% of your portfolio, and then you understand a stock's average daily range, and then you know where your stop is at, usually that low of day or prior low of day, you're going to get faked out every now and again. It's just about managing risk in real time and like knowing the level where you're looking to buy.